So that's just so I can put it on my YouTube channel. And right, so I need to share my screen, and that's not the one I need. So I need to go back. So I need to stop sharing that one and start again. I always have this problem. Must be something I'm doing wrong.
It flipped for a second.
Yeah. Just bear with me a second. If I could only work out what I'm doing wrong. Hang on. Try it again. So if I share my screen now, you should be able to see my
Yeah, you're good.
chart for gold. Okay. And what I normally do is I start off by stripping this back and showing how I get my 3 lines. I'll do that. And if I take off that as well, so I'll change it to, right, I'm on the 15-minute chart for gold. I've actually put the 3 lines on, but I'm going to strip them right back and just start from the beginning. So if I move my shaded area out the way for now, and I take off these 3 lines, I believe I've locked them. Yeah, I took the precaution of locking them this time because I moved them around quite a bit before. So unlock them and then get rid, and unlock and get rid. Okay, so we've now got the bear chart for gold. This is today's trading, and this is yesterday's trading. So for the 3-line strategy, I go down this. If you look at this left-hand channel here, I've got 1, 2, 3, 4, 5, 6, the 7th icon down. If you just hover over the arrow, it says prediction and measurement tools. If you click on that, you go down to this drop-down menu and you get fixed range volume profile. That's the one you get even with the free versions of Trading View. So I'm showing that one first, and what I need to do is start on the first candle for yesterday's trading, and then I need to click on the last candle of yesterday's trading, which is there, and there we've got the volume profile for yesterday, and then I need to add the 3 lines. So this is all of the volume for yesterday. The blue lines are what we call the V70 area. That's the top 70% of all the trades were placed within that blue area, within the limits of those lines. And the grey areas are the other 30%. So I'll just mark off this 70%. I'll put a line there, and I'll put a second line at the bottom. And what I normally do is just zoom in just to make those accurate, and just put them exactly where I want them. So that one's exactly between the grey and the blue. That's as near as I can get it. And this one, we'll just move that out of the way. This one is also, yeah, so what I'll do is I'll lock that. I'll go up here and I'll lock that so I can't interfere with them. So zoom out again, and we've still got the two lines. The third line we need to put on is the this red line here. I need to extend that across to today. So that is that is yesterday's point of control. So I'll put a line superimposed on there. I'll make it red. And I'll just, again, zoom in just to make sure that we're on the right place. So I'm actually slightly out there. So I'll put that up to there. And I'm going to lock that one as well. Right, so we've now got all three lines. The area between the two black lines is what we call our field of play, and the red line is yesterday's point of control, which is today's target. I mean, that's adequate if you just want to use the three-line strategy. But what I normally do, just for visual purposes, is I put on the shaded rectangle, and if I just put that up there and take the bottom there. So right, we've now got the real visual, and I don't think I need to put my labels on. This is what we call the value area high, this is the value area low, and this is the target for today. So just having a quick look at today's activity, I'm going to take off the, no, I'm not, I'm going to leave that for now. What I normally do is I just look quickly at what's gone on today. And as you can see, when price opened, sort of 11 o'clock last night, UK time, price was within our field of play. If you're open about at midnight, there was an opportunity for a sell down to the target. I don't think many people would be taking that one. Strictly following the rules, we would stay out then until price returned up to this point, and we would take a trade back down to the target. And then the third possible trade was from the top there down to the target. That's if you're just going to follow the three-line strategy rules, because we always take trades from either above or below the target, returning to the target. I guess there was another potential one. If you were looking at sort of 1 o'clock this morning, there was a potential trade back up to the target. And so if we're just following the three-line strategy, we only take trades back to the point of control. So there's already been a few potential trades using that strategy. However, I've started taking trades if we look at this trade here, this if you were open about at where are we, at 6:15 this morning and spotted this potential trade, you could have taken that down to the target, and then you could have if I'd taken that, I would have taken that trade down to the target. I would have got out at the target, and I would reassess, and my reassessment would tell me to wait until price actually it went back to retest, and then it decided to go down. It went all the way down to the bottom there. So that would have been, in my eyes, that would have been a valid trade away from the point of control, away from the target, but only once you got this candle opening well away from the. So what I'm saying is there's always a potential for price to come through the point of control and sort of have a little bit of a fake out back in that direction and then continue on its journey. So for me, that would have been two separate trades. That would have been one to the target and one from this point down to the value area low, and I would have got out at that point. And that would have been, in theory, just using the 3-line strategy, that would have been me done for the day. I guess we just measure that from the top of that candle down to that line. There's 80, just over 80 pips there, so that would have been more than enough for me for today. As it happens, I wasn't in that trade, I was doing something else. But it just proves the theory. Well, there are two theories. So there's a 3-line strategy theory, which is taking trades from above down to the target, or from here below up to the target. And then I'm adding on a bit of an extra, which is taking trades away from the point of control down to the end of the value area low. So I'm looking at extra potential trades by taking trades away from the point of control, as well as taking trades from there, for example, up to the point of control. Now, I'm keeping an eye on this volume profile, and I'm just going to go through what I see when I look at that profile. You can see that there's a peak of activity. The peak of the volume was at that price at 1934.54. 1934.5. That was the peak of where all the trades, both buys and sells, were placed during yesterday's trading. And then you can see when if you're going in the upward direction, you can see that it tailed off significantly up there, and it also tailed off significantly below that. So that was quite a good peak, but we have to bear in mind that there's another peak down the bottom. It wasn't quite the same size as that peak, but it was quite significant. So we need to look at what's happening here. Now, what happened yesterday was, on this peak, we had quite a lot of consolidation down in this area here. And if you look across at the main peak for yesterday, there was also quite a lot of consolidation here and here, and then price started to react to that, started to respect that line, and started to bounce off it a couple of times. But I'm sort of going towards this point now, because this is the sort of area that price is now, and because of this consolidation, this means that buyers and sellers were getting their act together. And the thing that stands out for me is there was quite a lot of consolidation around this area. So there's quite a strong magnet here, and price is indeed sort of respecting this and going back. We just need to work out what it's going to do. Because of this peak here, there's obviously a lot of money invested, and this is where we are at the minute. And we need to look at this area now and decide what we think might happen. Let me just, I'm going to go back to this in a second, but what I normally do is I take a look at the big picture and see what price has been doing over the last couple of weeks. And we've just got one volume profile here. I'll put others on in a second so you can have a look at that. But we had a peak, and this was the 8th of March, so that's 2 weeks ago today. We had this peak in price, and it almost went up to the highest price it's been for, I think this purple line represents a high that was made back in August 2020. So we almost got back to the highest high, and then it reversed. It was in an upward trend for quite some time, certainly from that point there, which is the 24th of February. It was in quite a steep upward trend, and since then it's been reversing and going back down. This was the lowest low, on the 16th of March. So that was last Wednesday, I believe. And then it started to come back up, but it's really in quite a lot of consolidation. If you look at that area there, it is still consolidating around that area. Let's put another volume profile on from sort of the start of that day there through to where we are right now. And you can see, I don't know if you saw that, and I swear I hadn't practiced that in advance, but this point of control for the last 1, 2, 3.5 days is exactly where the point of control we marked up at the start of this session. So I just take that off. I'll take it off and put it back on again. But there's the point of control from yesterday's session, which is today's target. And by putting an additional volume profile on from, where did I start it, from the start of that day to the current situation, it's exactly the same. That red line has superimposed itself on the original red line. So, as I say, I promise I hadn't rehearsed that. That was the first look at it, and by coincidence, we've got a. So, I mean, what that's telling me is that point of control is a particularly strong magnet for price to go back to. It's been consolidating around this area for 3 days now, and so positions have been taken and will be defended, and that's where most of the activities occurred over the last 3 days, not just yesterday, but for the last 3 days. So that's a point of interest. I'll get rid of that, and I'll also get rid of that. And what I'm going to do now is, for anybody who's got a trading view version, a paid for version, you can use this one here, which is a VPSV, which is a handy little tool that puts on the volume profile for each and every day. So that's giving me a bit more information about where price might go. What I'm seeing now is that there's an outstanding point of control from the 13th or 14th of March. That has to be taken out. That's a little bit like Paul uses imbalance, and that line there is telling me that there's something very similar to imbalance. If I zoom in, I'm sure I'll find some imbalance. But at this stage, what I'm looking for is where is price likely to go this afternoon. Now, there's a potential target. If price decides to break out of this zone here, it may well go up to that target, up to that blue line there. However, there's also a close by outstanding point of control from the 16th of March, just below. So we've got alternatives, we've got options to go up, we've got options to go down. There's a number of other, if it decides to go well down, there are a number of possible targets there as well. The problem we've got is that it was in steep increase, and then it went down to steep decrease, and now it's sort of consolidating. That doesn't mean we can't, there aren't any trades to be taken. It just means we're not in a strong trend up or a strong trend down. We just need to watch what price is doing. So let's go back to the 15-minute chart and take a closer look. Bearing in mind that there was an outstanding point of control. Where was it? It was there, so it was around about 1955, roughly. and there was a second one below, what was 1916. So just let's bear those in mind. So 1955 is just out of shot there. It's going to be up here. I would need to sort of move, there it is. We've got those same two lines back again. Look. 1955, if price decides to go above, 1908, 1909, if price decides to go below. So there's a couple of potential targets outside of this field of play. Let's just move this a little bit along. There we go. So first of all, what we need to do is focus on today's field of play. Let's do that first, and then we'll come back to these two. So if I reset the chart, and it's a bit easy to see. Let's give you. I'll go through what I'm thinking at this current moment about this price. First thing that I see is this blue line here, which is today's peak in volume profile. So we've taken our field of play from yesterday's activity, but the first thing I'm noticing about the current situation is we've got a blue line here and price is clinging to it. This is today's point of control. The reason why we don't use today's point of control is it's still developing. We're only halfway through the day, and this can change over time. And I think last time I did a session, it actually changed whilst I was on the live. We spotted it actually move. So that, if we're looking at where is price likely to go now, there's two likely possibilities. One is that it's going to go and break through this black line, break out of the current field of play. The other one is the first target northwards is that blue line, because you can see how prices struggled to get past that blue line. That's just within the last 4 hours it struggled. It came down and went through it and went back, and then came down, went through it again. So it is a significant area. Not as significant as this. This is our target for today, but it is. The way I think it is, I think if price is going to go up to back to the target, it's going to struggle to get through that point. It's not going to go. I think it's unlikely it'll go directly up to that point. I think it's going to take a bit of strength to get through that point, because that is the highest activity on today's market. I'm sort of biased towards the price going back up to this target.
But you got in balance there, a little bit of balance there, to
Yes.
at some point to fill.
Yes, we've got imbalance, which if you take from the bottom of that wick there up to the top of that wick there is a slight imbalance. Not insignificant number of pips either. Let's measure those pips from there down to there. Well, it's 16 pips, but it's still got to be filled. That area has got to be filled at some point. And look, it's going down to the line, and it's not wanting to go any further. So I'll stick with I think that my bias, just looking at that chart now, is that it's going to bounce off there, struggle to get through there, and then go through that imbalance, and it may well bounce off. Once it gets to that point there, it might struggle, because there's it is acting as a bit of a magnet for it, but it sometimes bounces off before it breaks through it. And I think it's going to go back up to this point here. No absolute guarantees, but we've got a very, very strong peak there. There was some imbalance there, but it's been taken out. So we do need to bear that in mind. Right, so let me go through my checklist and then I'll go on to what Anastasia was talking about yesterday. Where we're sort of, we have to bear in mind that New York normally opens round about this time, but they've changed their clocks, haven't they? They're now on daylight saving. So New York actually opened at 12:30 today until we catch up, until we put our clocks forward. So the 12:30 candle didn't cause that much of a disruption. There was a bit of, yeah, I mean, if we look closely, there was a sort of a week down and then a big week up on the next candle, but it wasn't as significant as it has been in other days. And then it settled down and went back down to this. So let's just go through my 3-point checklist. Before I get into any trades, I put on the Ninja Matrix. And as you can see, although I need to check my settings. Right, so I've been playing around with looking at 1 minute entries. So what I need to do is start off on the, if you're looking at the 15-minute chart, which I am, I need my matrix time frame to be on 1 hour. And so, yes, we've still got, we're looking at selling according to the matrix. The matrix started, you had a Ninja Matrix down at that point, and it's continued, even though it went up at that point, it's still in a selling mode. What I've started doing is looking sort of down a little bit, down at time frame. If you change to 5 minutes, you need to change your matrix down to 30 minutes. And then just double check, yeah, we're still in a downward trend. And then if you go down to 1 minute, which I'm looking at the minute, I'm sort of doing a few tests to see how this works. I know Jeff has been looking at the 1 minute chart. No, I don't want to be 1 minute. It wants to be, say, 5 minutes. So I'm on the 1 minute chart and I'm using the 5 minute matrix time frame. And we're still, even though I'm playing around with the time frame, we're still in a fairly strong downward trend. That might be about to change, but so everything on the matrix is saying we're still looking downwards. We haven't had a Ninja Matrix up yet, although, as I say, we may well in a few minutes. I'll revert back to the 5 minute, which needs to be on the 30-minute chart, 30-minute matrix. Okay, so we're looking at a 5 minute chart, and what I do next is I turn on the Ninjacator, and sticking with a 5 minute chart for the minute. Yes, we've got the Ninja down. I need to put the Heikin Ashi candles on. So we've got a Ninja down, which is coinciding with the Ninja Matrix down. I'll just turn off the, you see you've got a Ninja Matrix down there. If I put on the Ninjacator, it sort of superimposes there on top of it. So it's the same candle and it's saying we're going down. And that's what's actually happening with price at the minute. Now, so I look for the Ninja Matrix to tell me which direction to go in. I look for the Ninja down to tell me it's time to get in for a sell. And the third thing I look for is the moving averages. So my yellow line, which is the 5 minute, the 5 moving average, has started to move away from the red which is a 13 moving average. It's gone below it and it's moving away from it. So that's suggesting quite a strong sell at the moment. But the reality is price is actually going up. Well, it's been further down than it is now. So it's still in a sell trend, but it's still sort of making its mind up. So maybe we're in for a downward move rather than moving back up to that. Now, if I very briefly, there was a session on Go Live yesterday by Anastasia, and I can't even pronounce her second name, but she's quite a good educator on IML, and I watched the session and I've taken some of the slides and I'm looking at what she was suggesting. And I think it's going to be useful for future reference to avoid getting stopped out in some of these situations. So if we look at this, we're on the 5-minute chart. So if we look at this area, where it turned from green, sorry, where it turned from red to green, the start of that move there, we've been in consolidation. And I'm not trying to give you the precise information that Anastasia gives, because I'm still watching it and studying it, but it went something like this. If you're in consolidation, which we are now, it's moving. In fact, I'm going to mark the consolidation. If you watch Paul this morning, he referred to Anastasia and he suggested using a GAN box, which was this icon here, and then you go to the GAN box, and Paul was saying if you sort of click at say at the top of that wick there, and then take it down to, where are we? Let's say there. He was suggesting that you could use a GAN box, and that was something that you could potentially use. The downside of that is you can't set an alarm on it to tell you when price is moving out. So you can use a GAN box if you want. I would prefer to use the parallel channel. Anastasia was suggesting using Fibonacci's, but I'll use the parallel channel, and then I'll tell you why. So trendline tools, parallel channel, consolidation from about there, and then down to, let's take it down to there. Oops. So if you click on that, it stays in position. But the reason I like this is we need to, for the purposes of Anastasia's strategy, you need to be able to measure the range from sort of the top of the consolidation to the bottom of the consolidation. I'm not saying I've done that 100% accurately, but when you use a parallel channel, which I've just done there, I've taken that parallel channel. What you can do is, if you click on the channel, you can adjust the settings, and you can click on or off the middle line. So without the middle line, you've just got the top and the bottom. If you put the middle line in, it comes up at 50%. So that dashed line is actually 50% of the range of the consolidation. And that's actually something that Anastasia looks for. She, I'll come back to this later. I'm going to do this on every session from now on. What she's suggesting is that when price breaks out of the parallel channel or the GAN box, or if you want to use fibs, you can set the fibs to tell you 50%. Personal choice. I'm going to go with the parallel channel for the simple reason that if I click on it, I can set an alarm, set an alert on there and ask it to let me know when price exits the channel. If I do it once per bar, I'll get an alert every time price. In reality, there we go. It's telling me it's gone out. In reality, what it'll do is it'll tell me not only when it comes out, but it'll also tell me when it comes back in. I think that's a bit of a glitch, but it's a useful glitch. So what we've got now is, if this was positioned 100% accurately, we'd have the top of the range at that point there, and we'd have the bottom of the range at that point there. I'm not suggesting I've drawn that 100% accurately. We need to look closer than that. But we've also got, so we've got the top and the bottom, but we've also got the 50%, which is the important thing if you're following Anastaina's strategy. And I've also got the alarm to tell me when price leaves that channel. So let's go a little bit in a bit more detail on Anastasia's strategy. She's suggesting, and we're trialing this at the minute. She's suggesting that when you're in this consolidation, price will she's talking about the thing that Paul talks about, and Kevin and Brian, everybody talks about the fact that there's money in stop losses both above and below, because people are placing trades assuming that they know which way price is going to go. So if for instance you were suggesting to yourself that price was going to go down, you would set a stop loss, and where you would place it might be in that area, in this rough area here. And similarly, if you were thinking that price is going to go for a buy, you will set your stop loss down here. And what Anastasia is suggesting is, if you want to avoid getting stopped out, don't place your trades until price actually makes a move. So wait until price gets outside and then reassess it. And she talks about a first tier. This here would be what she would call the first tier. This would be how does she call it? For this would be first tier resistance. So the top of that wick has been resisted by price, has been resisted. So that was acting as a ceiling, if you like, for price. And then if you look down, where are we? I think we should maybe move that. We've got to try and find the initial top and bottom. Perhaps it's a little bit further down. Perhaps there's something there. I don't know. Maybe there. She's suggesting there's a tier 1, which is like your initial resistance and an initial support. And this is where most people's stop losses are going to be placed, just below there and just above. And then what she's saying is there's a second tier. And I can see that there. Can you see how prices come up and taken out those stop losses? So if that was the previous high, people will be placing the stop losses here, and price has already been up and taken those stop losses and then started to go down. So she's suggesting there's a tier 2 of resistance there. And if we look below, there's a tier 2 having been formed here. And what she's saying is the potential for these to be fake, what they call fake outs. So we're fooling people into thinking that's where prices had met resistance, and now it's been up and it's got the stop losses, and now it's going down to below and it's taking the stop losses that people place below. See these low, those 1, 2, 3, 4 lows there, and below that will be everybody's stop loss, and it's been out and it's taken that. So I need to put a bit more meat onto that thought, and just sort of dissect. Well, I need to back test and just see how this reacts. But what she said, what Anastasia would say is, price now has been above and taking out stop losses, and it's been below and taking out stop losses. And now what's it going to do? Is it going to go down, back to that medium and then come down? There's a suggestion from Anastasia that that is where price will go before it genuinely goes down. Or it could, if it breaks through that and it goes for a buy, this is the area where you start to get confirmations that that's what's going to happen. So I'm not saying I've explained it 100%, because I'm not saying I totally understand it 100%, and I certainly haven't back tested it 100%. But that is, I think, is a potential to stop you getting stopped out. If you bear in mind first tier resistance and second tier resistance. First tier resistance, I think they're so well. I'm struggling to know whether it's there or whether it's where these four. Both are possibilities. As I say, I need to back test, but that's a potential first tier, and this is a potential second tier, and we just need to see what price is going to do. But it is, if it works, it's quite a powerful way of avoiding getting stopped out, by understanding that the price goes up, take out stop losses, comes down, take out stop losses, and then it goes to where it wanted to go in the first place. Now it's sort of stalling, isn't it, at the minute? It's not giving as much idea. I'm just going to the 1 minute. Yeah, it's sort of forming another lot of consolidation round on the 1 minute. We've got, if I take Heiken Ashes off, put normal candles on, we've got a strong suggestion of a downward move. This is on a 1 minute chart, which is quite scary sometimes. Go back to the 5 minute. Yeah, it is suggesting that it's going to go downwards, but this could be a fake out. So, as I say, both Paul and I have talked about this. We're both interested in back testing this, and we'll let you know what we find. But that's what it's based on. It's based on 2 tiers of resistance at the top and 2 tiers of resistance at the bottom. So 2 tiers of support at the bottom, and waiting until price is actually broken through in either direction.
So Richard, are you basically saying this all ends in tears?
No, I think I see it as a way of avoiding getting caught out. I think if
Patience, yeah, I'm sure, yeah.
I think if it works as Anastasia said it does, and we've got to back test it, and you've got both me and Paul are going to back test it before we sort of push it any further. If it works the way Anastasia said it works, it's going to stop you getting stopped out just above and just below.
I used to watch her when she was on the, on the open channel before it became FX Pro. So I don't see her anymore. So whether I bite the bullet and get Gold Cup or FX Pro, and Chris, she definitely is worth watching.
Yeah, it's unfortunate it's an extra, I forget how much, was it $20, I think, per month. But I'm finding it worthwhile. I'm not trying to sell it to anybody, but yeah, I think this is something she didn't mention up until yesterday. So whether it's a new thing or not, I don't know. But you can see what's happening. It's playing around down here, and it may just be a fake out. It might well be intending to go up, or there again, it could be intended to. Yeah, nobody knows. And what this bit of extra strategy will do will stop us getting in too early and getting stopped out. That's what I'm hoping anyway. But it needs a lot of, well, for me to start using it, I need to back test it, and I need to tighten up on these lines as well. I need to go through the training that she did yesterday and just get sort of secured to where I need to place these. I mean, to me, that looks okay. That looks like the first tier, and that looks like the second tier. I'm not as sure about this one here, because I think we really ought to be looking back here, but never mind. It's worth back testing.
If you go where the price is now, I've got a separate chart open. If you go back to where this shot up yesterday, and there's a banker's candle on that big up move above your 12. There's a banker's candle, and that's where that down move came right the way down this morning and pretty much mitigated it. And that was the move that was discussed on Paul's or Michael Martin's second video that Paul put the 2 videos up.
Yes,
and that goes right to the right onto it, and it's actually covered it even more just now. So it's completely covered it off now, I think. But yeah, so it's right spot on the video that Paul put up. It was good.
Yeah. Food for thought. So I mean, I would have liked to have been able to say where I think price is going to go. The truth at the minute is I've got no idea. Are we being fooled by this downward move? Is it going to go back? You know, that's quite a strong magnet. Price will. I mean, just look at today. It's been there a few times. You know, it came down. It went to that point. It went down. It went back up to that point. It went up. It came back to that point. It went up. It came back to that point. So that is acting as quite a strong magnet, and I think all we can do is just sit and wait. It will make a move at some point. I'm slightly confused by the timing, because that's 13:45, which is over an hour after New York opened. However, it's early. It's early. You know, if we're basing this is gold spot versus US dollar, so the New York market is quite an influence on price, and there's all of our afternoon for this to make its move. I've got a feeling that my initial hunch was right, that it's actually going to go back up there, but we need it. I mean, let's. What are the steps along the way? Price. I'll put it on the 15-minute chart, and then it's slightly easier. If price is indeed going up, it's got to get past this, which is a bit of a resistance. It's got to get past that midway point. It's also got to get past that blue line there, and then it's got to break out of this channel to the north. And there's a lot of ifs and buts along the way. There's just on today, there's a peak of activity above there, and if you go back to yesterday, I still I'm not going to put money on it, but I still think this is the strongest market magnet in that field of play. It's difficult to predict, but you know, if somebody, as Paul said this morning, somebody put a gun to your head and you had to make a decision, what would it be? My decision would be that we're going to go north and back up to this this target for today. But you know, don't place any trades on the strength of my views. I don't always get
You
it
see
right.
how the bottom of that wick, that last wick, go left in your chart, and it's almost at that low wick further to your. Keep going, keep going. Yeah, that one. By that ninja up, it's sort of hitting down towards there.
Yes. Yes. It might well go down to, because this was all cells, so it might go down and then come back up again. But let's just look at let's take some additional. Let's have a look at the stochastic, for instance. I know that the stochastic can come down and go into oversold, but then it can actually stay oversold for long periods. It quite often does. It doesn't mean to say just because we're oversold that we're going to start buying. It looks like there might be some 2 o'clock news there as well. There's yellow flag, so it's not particularly important, but they can use that. And we've also got a red dot on the AOMACD, which is saying, well, so it's conflicting. It's this is saying we might be going up, and this is saying we're below the 0 and we've got a red dot, so we might be going down. So it's conflicting interests, conflicting information. So all we can do is just sit and wait, and you know, let price do what it wants to do, and make a decision when it starts to make a move. Just we're almost running out of time. I'm not sure whether we've got people on the Facebook stream or not, but somebody asked me last time I was on when I'm going to publish the I've got it here, haven't I? Can you see my spreadsheets?
Yeah.
Yeah, okay. I've restarted work on my spreadsheet for these indices. I'm going to put some more columns on here, and I'm going to put some more information in here. But I just want to make an easy reference to, so you can determine what lot sizes to use. First of all, how to read a pip, because it's different on indices to Forex. So what I'm trying to do is, on normal Forex pairs, you look at the pip is the 4th digit after the decimal point. So a 1 pip increase is from 275 to 285. It's different on JPY pairs. It's the second number after the decimal place. So it's 754 becomes 764 if it increases by 1 pip. On gold, it's the first number after the decimal place. So 1 pip is 12 to 22. So I'm going to do this all the way down on all of the pairs that Jeff focuses on in his sessions. And I'm also going to add on sort of something about lot sizes, which I get from this. Can you now see the Nash markets? I showed this last week, but I haven't quite finished the chart yet. And basically, this is an alternative to the MyFX book lot size calculator, and this one works on all of the indices. It works on metals, indices, energies, and cryptos. So if you want US oil, for instance, you can select US oil, UK oil, and natural gas, and it'll calculate your lot size, or calculate your lot size based on what risk you want to take. So I think it's quite a powerful tool. It's certainly something I'm using, and I'm going to incorporate the information I get from this in this PIP calculator. So you've just got a handy small spreadsheet. So when you're getting in a trade, you're reasonably sure of exactly what your risk is for each of these indices. So that was just by the by. Let's have a look. Let's just go back and have a final look at the price. It's still not telling us a great deal. If we got in for a sell, we would have been taken out, I guess. So patience pays. And I'm just about running out of time, and I'm going to try and, if Anastasia is actually on today at 2 o'clock, I'm going to try and watch that, but it's not 100% sure because of the time change. She advertised it starting at 1 o'clock yesterday, but it didn't actually start till 2. But anyway, I'm going to have a look at Anastasia this afternoon. So are there
Richard?
any final questions before I?
That's good. Thank you
Hey,
very much.
Richard, this is Sean.
Hello, Sean.
Anastasia is not on today. She had the time changes messed up. So she's
Right.
going to push today's session till tomorrow at 9 a.m. Eastern.
9 a.m. Eastern, so that should be
So our
1
normal time.
That should be 1 p.m. as far as UK time is concerned.
I don't do the math too well.
I'll look at 1 p.m. tomorrow, and
Okay.
if it turns out to be 2 p.m. as it did yesterday, then so be it. It'll correct itself in a week or so's time, won't it, when we change our clocks? Right, okay, well, thanks very much for jumping on. I'm on again tomorrow at 8:30 a.m. There's a possible change for next week because we think we might have James Leone doing a session at my normal time on Wednesday a.m., but we'll let you know when that's confirmed. So thanks very much indeed, and I'll see you next time.
Thanks, Richard.
Cheers now.
Thank you.
Thanks now.